Joining me now is Eric Zaunscherb. He is the chairman of Critical Elements Lithium. Great to see you, sir.
Good to see you too.
So you are busy advancing the fully permitted Rose project in Quebec. You want to be a large producer of lithium. You came out with a what you call a robust definitive feasibility study. You've got a net present value of more than $2 billion, post-tax internal rate of return 66%. So what are some of the other highlights, and what should we know about the Rose project?
Right. Well, it is, as you say, one of the more advanced projects in hard rock lithium in North America. And that's really important in the fact that you're shortening a lot of supply chains for the OEMs, for the auto manufacturers. That's all onshoring. And the result is that you have a project that is in one of the top jurisdictions globally from an ESG perspective. Not only have you got one of the cleanest grids, being 96% hydropower, but you've also got one of the highest thresholds to get permitted. So this project took quite some time to get permitted. The permitting's in place. So we did an IBA with the CRE, the Picatao Agreement, in 2019, federal permit in 21, provincial permitting in 22, and now we've been working on knocking off all those smaller permits that need to be put in place in order to be shovel ready sometime this summer. So that's the key, is to getting in place for that.
Right, and you're looking to expand the resource footprint. You've got a discovery with a new Rose West. So what are some of the details there and the plans there?
Sure, we haven't put out a detailed release yet on what we're finding in the exploration there, but let's just say that you're looking at 8 kilometers to the west. You've got mineralization that is looking quite attractive. One of the knocks against the project has been in that it only has 17 years life. The reality is drilling stopped in 2016, so that management focused on the feasibility study. And so getting that in place and understanding the economics, that was what was important at the time. Now we can go back and to see what in the area is there in terms of satellite mineralization that can feed into that project and extend the life. And if we get higher grade, so much the better. It can displace some of the lower grade that's in the end of the mine plan.
The goal for commercial production is 2026. That's not that far away. That'll go pretty quickly. So can you take us through that timeline?
Sure. The key is, for a final investment decision, we have to have project financing in place. And obviously with the share price collapsing along with all the other lithium stocks and lithium pricing being correcting as well, that means that we have to pivot. We have to look at how we're going to put this project into production, get the funding in place. Once the funding is in place, and we hope to accomplish that over the next few months, then we'll see about making a final investment decision. We would love to get some construction starting before the winter, so by the end of the fall of this year, which then leads into about a 20-month construction period. So that would have us ramping up production towards the end of 26 and into 27.
Now, Eric, you did something interesting several months ago, an open letter to shareholders. You don't often see that from CEOs. And some of it had to do with the progress in finding a strategic partner. You say, I don't want to rush it. We want to do it right. And the second part of that question is, in Quebec, we know the Nemaska lithium story turned into a debacle. So how much does that inform your approach, and how much do you obviously want to be this sort of the anti-Nemaska?
Yeah, I mean, you're absolutely right. It does inform the approach, and it speaks to the fact that we have extremely experienced and talented individuals in the form of Stefan Haber and Marcus Brune, who were involved in the lithium industry for a long period of time that ended up in the sale of the Rockwood lithium assets for $6.3 billion US. With the experience that they have, they know how to pivot in these different phases of the market. And the reality is that we have been pivoting, we've been adjusting to the market in how we're putting this into production. You referred to Nemaska. Nemaska was adamant about getting into production, come hell or high water. And they made some mistakes in the capital structure that they put together. We are avoiding that. In fact, I'm thrilled that we're not building right now, because we're seeing all around the world projects that are being pulled back, where off-takers and banks are, let's say, moving the goalposts and forcing companies to raise equity at extremely depressed prices. We're not going to do that. We want to make sure that our shareholders get the best value from its assets.
Right. Now, just lastly here, Eric, the stock from 20 to 23 had a nice run, 10-bagger, A lot of companies did well during that period. Then the market shifted. So against the backdrop that you're describing there, the lithium backdrop, what's the synopsis of the investment case for the company?
Put simply, we've got one of the best undeveloped projects in North America. It will be shovel ready later this summer. We've got people that know what they're doing, and we have the ability to put together a project financing package that makes sense for the shareholder. At the end of the day, we will be working towards making a final investment decision and getting that project into production within the next couple of years.
Almost like you've done that before. That was perfect in 30 seconds. Excellent. Thanks, Eric.
Pleasure.
Okay, good stuff. Eric Zaunscherb, he is the chairman of Critical Elements Lithium.